Mwathe here. Let's take a look at the wave cancellation again, just because even in the recent market, I see it being displayed by the market. So we're taking a look at the RSI, and we are trying to understand what the RSI is telling us in terms of the volatility in the market. In this particular example, we have a trend line that is established from these lows here. On the RSI, we draw a straight line. So what the market wants to do is the market wants to go flat here before it can decide whether it wants to go up or it wants to go down. So the idea is we are taking a look at what happens in this area here, where the market really wants to go flat, but because of volatility and also because the market wants to confuse, it does what I call a wave cancellation. So this is what we're going to be looking at, this area here, where I believe in reality the market wants to go flat, but the market decides not to go flat instead, but to do something which would cancel each other out. But what happens is that traders get very confused by the volatility. So let me explain what I'm talking about here. Let's take a look at what the market wants to do. So even though this is what the market wants to do, be flat, it does something like this: up, down, up, where this is equal in terms of space to this one. So those two cancel out. So the market actually does, instead of doing this, it does this. You have what I call uniformity, where this here, this space is equal to that space. In this particular example, the market, if you understand this, because you've already established the line here, so once you see this happening, you know that the next time the market takes either direction, if it starts moving higher, then it is for a good move to the upside. Why? Because all this was supposed to be flat, and then it has decided to move higher. Now, if the market decides to move lower, then that becomes a sell signal, because after what should have been flat, the market is now deciding to go down. So once you understand that this period here was only meant to confuse you, then the next action after this cancellation is actually legit, and the market will tell you which way it wants to go. Now, one thing we can also understand here is, because the market has established this as being a true line, so let's say down the road, if the market comes and breaks below that line, then that sell or that move below that line becomes an actual sell signal, because this line has been legitimized by the market, forming this wave cancellation, giving you a buy signal in this particular example, and down the road coming and cracking below that. So that becomes a legit sell signal, because it is a confirmed line, not by you, but by the stock or by the market itself. So let's take a look at some other forms of uniformity, and remember we are talking about this level. This cancellation comes in many forms. Take a look at this example here. In this particular example, it's more round. In other words, it's more round in terms of the space there equals the space there. So that's round type of wave cancellation. Here's another one. It's like a double top on each direction. Double top here, double top here, double bottom here, double bottom here. Ultimately, this space is equal to that space, so they cancel out. So in other words, the market wanted to go flat here, but decided to confuse everybody. Take a look at another different type of wave cancellation, where you get this space being equal to that space, this space being equal to that space there. So in other words, the market really wanted to go flat, but decided to form double wave cancellation to confuse you even twice, or double the volatility there. Okay, here's another one, which is almost the same thing, but now you see that it's more confusing because the market is going up, down, up, down, up, down here, but this space cancels out with this space. This space cancels out with this space. So actually in this particular example, once it comes here and bounces off, this becomes this low here before the move higher becomes your buy point. And I'm going to show you some examples right now. Alright, so this is a chart for the Dow Jones coming into late 2013. What I want to show you here is on this particular chart you'll see two wave cancellations that I have identified. There's a wave cancellation there that cancels out with that wave cancellation there. So let me take that off. So what really the market, even though the market went up, down, and then up, cancelling out. So what you decide here is once the market moves above this level here, that becomes a buy signal, because this action, up, down, up, and then ultimately deciding to take the upside here, this now becomes a buy signal here, which is this box here. That's why the market had this movement, and you can see the market went higher. Also on this chart you see that there's another wave cancellation. This space is equal to, in space and also time, to that space. So that's wave cancellation. Hope you can see that. And so once the market confuses everybody, and you've already established that this line is legit because it went through here, and by understanding wave cancellation that made sense. So now you come again, touches that low, so this becomes a wave cancellation. Once the market starts moving higher here, that becomes a legitimate movement to the upside. This is why you see this market taking off. Now you can use that wave cancellation to have decided which way to place yourself once you saw that taking place. Now let's take a look at another one. This is now on the weekly chart, and this time being the airline index. Here we have the lows. Take the lows there, close to that low, touching that low there, and also through this area here, which is the low. So what I want to point out here is that there seems to be a wave cancellation on the weekly RSI, which is this distance here, which is equal in space to that distance there. So that becomes a wave cancellation. In other words, the market actually wanted to stay flat for all these weeks here, if not for all these months, but decided to do a number like this, this, and this. So at this particular point here, there's a decision the market needs to make. Do we move higher or do we move lower? So remember, in your mind, you have to tell yourself to negate this movement here and to actually assume it is flat. So in your mind, this is flat, and once the market decides which way it wants to go after this flat action, and this particular example, again, it went higher. Once it starts creeping to the upside, then you know here that this is actually a buy signal. And that's why you can see that after this wave cancellation action, this decision was made to move the market higher, and that's why you see it moving higher. Now in this particular market, we have to watch for this line. So this blue line has now been legitimized by the market. You can see we've held here once on that line, which happens to be this low here. So if the market were to crack the support line or the blue line, if this was to crack here, then that becomes a true signal to watch for, a sell signal, because it's telling you that now the market wants to go lower after this line has been holding the market together going back a couple of years. So we watch that line because it makes sense even when we put that wave cancellation into play. Eric Moore there. Hope that makes sense. Good luck, peace, and blessings.